Melbourne is now officially the cheapest capital city to buy property in, which means there are plenty of great suburbs to invest in. The only problem is, how do you know which ones actually have long-term potential? I'm Gilbert, a property data analyst, investor, and self-proclaimed data nerd, and I've combined my experience on both to help you narrow it down. In fact, I've built a tool called SuburbsFinder that's used by thousands of property investors, buyers agents, and mortgage brokers across Australia for this exact reason: finding the best locations to invest in. So in this video, I've identified 8 Melbourne suburbs under 750,000, the key data metrics that I look for when choosing a property, and how you can do the same. And make sure you stick around to the end, because the 8th and final suburb has some of the best metrics I've seen in quite some time. Before I jump straight into the list, I want to quickly explain how I found these suburbs. There are literally hundreds of suburbs in Melbourne under 750,000. The goal is simple: find suburbs where demand is rising, supply is tightening, and prices still have room to grow. Here's what I look at: median price. So I set the median price in between 600 to 750,000 to ensure we're only looking at suburbs that fit within this budget range. Second, stock on market percentage. I set this at 2% or below because this indicates a tight supply of available properties. When fewer homes are on the market, competition among buyers tends to push prices up. Third, days on market. I set this at 40 days or less to focus on suburbs where properties are selling quickly. If homes are moving this fast, it's a clear indicator of strong demand. Fourth, vacancy rate. I filtered for suburbs with a vacancy rate of 2% below, because this tells us that rental properties in the area are being filled quickly. If tenants are snapping up rentals, it means that there's a strong rental demand, which is great for investors. Fifth, capital growth. I set the threshold at least 2% growth in the past 12 months, because this shows a suburb is already experiencing price appreciation. It also helps filter out areas that might be stagnant or declining. 6. Rental yield. I set this at a minimum of 3.5% to ensure we're looking at suburbs that offer a decent return relative to the purchase price. Anything lower might not generate strong enough cash flow. 7. Demographic factors. I factored in ERSAD scores, which measures income levels, education, and employment, to assess if a suburb has a stable, improving socio-economic profile. I also prioritize areas where population is trending upward, as this often leads to increased demand for housing. 8. Infrastructure and development. I look at suburbs with significant infrastructure projects because these tend to increase demand and drive long-term capital growth. I applied all of these filters to Melbourne's property market, and here's what I found, starting from number 8 and counting down to the most affordable. And number 8 on our list is Launching Place, with a median price of 722,000. And here's why it made the list. Stock on market is 0.85%, which is extremely limited supply, meaning prices are likely to rise. And then you have capital growth of 7.28% in the last 12 months, the highest appreciation in our list. Next is vacancy rate at 1.15%. It's really low, ensuring rental properties are quickly filled. And lastly, it has rental yield of 3.6% property price. Launching Place is a pretty good option to invest. A, because it has a very limited supply indicated by low stock on market. Next is capital growth is increasing, so it's consistent over the past 12 months. Vacancy rate is low, meaning you'll have less vacancy in terms of tenants. And lastly, you have a decent return, which is the yield is 3.6%. So a launching place is definitely one of the best picks. And on number 7, we have Kealba with a median price of 700,000. And here's why it made the list. It has a stock on market of 0.32%, which is extremely low, meaning there's a high buyer competition, and a capital growth over 12 months, it has increased by 3.7%, meaning there's a continuous growth experiencing on the suburb, and the vacancy rate is 1.08%, which shows there's a high demand in the area, and rental yield is at 3.57%, which is decent balance between growth and rental return. Kealba is an underrated gem, sitting at 14 kilometers from the CBD. And if you are an investor who prioritizes capital growth over rental yield, this is a strong choice. Considering that there's a continued rental increase, a continued property growth, and with the stock levels that is tight. So prices are likely to continue rising. And at number 6, we have Woori Yallock with median price of 675,000. It has a stock on market of 0.68%, which means it has a limited housing options, keeping prices strong. And over the past 12 months, the capital growth has increased by 3.05%, showing consistent appreciation over time. While the vacancy rate remains really low at 1.15%, which makes it attractive for investors. And lastly, rental yield is at 3.85%, which is a solid return compared to price. So investors who want strong rental demand in a growing regional suburb with potential for capital growth, the low stock levels make it less volatile than other markets. At number 5, we have Hampton Park with a median price of 670,000. It made the list because it has a stock on market of 1.18%, which means that the supply keeps demand steady. And the capital growth over the past 12 months is 4.04%, one of the strongest growth rates in our list. Next is the vacancy rate of 1.60%. It's still high, but still under 2%, meaning it still has a strong rental occupancy. But most important, the rental yield is 3.88%, which is higher than the average. Hampton Park offers the best balance between rental yield and capital growth, making it ideal for investors who want cash flow without sacrificing appreciation potential. And at number 4, we have Deer Park with a median price of 660,000. As you can see here, the stock on market is 0.63%, which means a very limited housing supply. And then we have the capital growth, which has increased at 3.13% over the last 12 months, which is higher than Kings Park, showing strong demand. And vacancy rate is 1.66%, slightly higher, but still under 2%, meaning rental properties get filled quickly. And lastly, as you can see here, the rental yield is at 3.78%, a consistently strong cash flow returns. Deer Park is perfect for investors wanting close access to the CBD, 17 kilometers away, while securing a property in an area with increasing demand. It is more affordable than inner suburbs, but still close enough for solid long-term appreciation. And at number 3, we have Kings Park with a median price of 616,000. Stock on market is 0.48%, extremely low supply, meaning it's harder for buyers to find properties, which typically pushes prices up. And the capital growth over the past 12 months is at 2.67%, which is pretty moderate appreciation, but consistent growth. And vacancy rate is at 1.08%, meaning properties don't sit empty for long. and rental yield is at 3.80%, a solid balance between capital growth and cash flow potential. Kings Park is ideal for investors looking for stable, low-risk area with a steady appreciation and high rental demand because of its tight supply and proximity to the CBD, which is only 19 kilometers away. It has low volatility and appeals to long-term investors looking for both capital growth and rental income. At number 2, we have Millgrove with a median house price of $605,000. It has a stock on market of 1.78%, which is higher than some of the others in our list, but still below 2%. And the capital growth over the past 12 months was 5.40%, one of the highest growth rates here. Vacancy rate is at 0.80%, which is extremely low, ensuring high rental demand. This suburb is perfect for cash flow focused investors who want rental return and minimal vacancy risk. With the highest yield in our list at 4.43%, it's a great pick for those looking to maximize income while still benefiting from price appreciation. And the first in our list, finally, we have Doveton with a median house price of $600,000 and the stock on market percentage at 1.38%. Moderate, meaning some competition, but still a seller's market. And the growth over the past 12 months is 5.54%. One of the best performing suburbs for price appreciation. And the vacancy rate is really low, under 1% at 0.97, indicating a strong rental demand. While rental yield is at 3.99%, showing a really strong return while still maintaining growth potential. Doveton is a balanced investment suburb. Strong rental yield, strong capital growth, and low vacancies. This makes it a great option for both cash flow and growth investors who want something that performs well on both fronts. So those are the 8 best investment suburbs in Melbourne under $750,000. Instead of waiting for a suburb to be labeled a hotspot, this approach lets you spot warm spots before they take off. I've saved this exact search in SuburbsFinder so I can track these areas monthly. If you want to do the same, you can try SuburbsFinder and start tracking potential investments before they hit everyone else's radar. I've left a link down below.